Hey everyone, wanted to jump on here and give a quick investment update for what we're seeing going on with the market this week, the week of October 16th, 2023. So this week was a big week for earnings calls. So we saw some major companies in the US report earnings for this week, some financial companies including American Express, Bank of America, and Goldman Sachs. We also saw some of the high-flying tech names report earnings this week, including Netflix and then also automobile maker Tesla reported earnings as well. So far, the earnings results were a little bit mixed, with the majority of the companies that reported this week actually saw a decline in their stock price after the earnings reports came out, with the exception of Netflix. So Netflix saw a big jump in their price as they're saying that the password crackdown is starting to help, and they saw their subscriber growth grow over 10%. Tesla stock was hit one of the hardest, and that is due to most of the sentiment coming out from CEO Elon Musk. So Elon Musk is definitely on the side of the consumer. He has been drastically cutting prices for his Tesla automobiles. He believes that if he can get his price low enough on these cars, that he can have the world's best-selling car. In what they are doing with this, they're increasing efficiencies, and what that is doing, it's also lowering margins for Tesla. However, he is very much obsessed about driving that price down and making these cars affordable for all consumers. That stock was, like I said, had the biggest slump for the week, was down around 10% after those earnings reports came out. If you have the time, listen to that conference call with Elon. He shares some great information about what's going on at Tesla. And although this might be a bit of a short-term step back for the stock, I do think long-term wise, it will be better off for the company and also the consumer. A lot of the news this week, which drove the market down, was related around the U.S. Treasury rate. So the 10-year rate was approaching 5%, and on Friday eclipsed that 5% mark. What that did was had a negative impact on stocks. So it caused stocks to decrease, because investors are simply not willing to take that risk premium that you have to invest in stocks. They're taking that risk-free rate, saying, give me the 5%, I'll take that, and that led to a drop in stocks for this week. Obviously, one of the things that's top of mind as well is the horrific events that are going on over in Israel. What we have seen and how this may potentially relate to the stock market, a lot of these geopolitical risks might have a short-term or a brief impact on the stock market. However, the market seems to somewhat ignore that sentiment and continue to march forward and continue to increase. One of the things to watch is if the conflict spreads and pulls in other nations, what effect that might have. So far, we've seen a spike in oil prices, and a lot of that is due to the conflict that is going on. So there's a brief recap of what we saw in the markets this week. Leave a comment if you'd like, or let us know what's top of mind for your investment portfolio.